Good morning. It's Market Day Report. We're up and trading. What kind of a day will we have? We've had some roller coaster days already this week. Start with the corn market. We were higher in the overnight session, and we're gaining a little more today. You know, the corn market was actually lower in the day session yesterday. So again, day higher, day lower, day higher, day lower. Does that mean we're higher today? May 448 and a quarter. We're pretty close to the top side of a 6-cent trade range, and that's up 4.5 cents. December new crop up 474 and a half. And the soybean trade was lower yesterday. Saw a little bit of strength in the overnight action. May right now, though, almost a penny lower at 1168 3/4. Wheat market. Well, wheat is on the higher side right now, 584 and a half. That's down, or up 6 3/4 cents. Hard red is trading up 9 and a half at 595 and a quarter. Are we ready to run back towards that $6 mark on July? Then we wrap it up with cotton here, down 13, 68.56. Brady Huck's with EmpowerAg Trading. I would imagine the higher, lower closes we've had this week could be tied to headlines. What do you think?
Definitely. Grain markets absorbing those headlines, Tony. So good to see corn bidding back up a little bit here today. May is reclaiming that 200-day moving average. So good to see. I think the grains are still watching the Middle East. And is there signs of calm, signs of escalation? Energy markets, big leader here in this space. And $50 crude versus $70, $80 crude, completely different scenarios, and grains very much tied to your energy market. So we've got a little bit of volatility. It's coming back in these markets, still relatively low historically, makes those options relatively inexpensive, and maybe more volatility ahead. We've talked about that time and time again, but don't let volatility catch you by surprise going forward. Other thing we had this morning, Tony, was the Stats Canada planting intentions report, and the trade was kind of looking for a few more canola acres than what actually got printed. So canola hasn't exactly bought acres yet, according to that survey, which was based, I think, back in December or early January. So lots changed since then. Wheat acres came in a little above what the trade was looking for, and canola acres a little less. So big difference there, though, in what gets printed and what actually gets planted, though. We all know that, Tony.
Okay, so that's kind of looking on the north side of North America. What about the south side of South America and weather there? Are you watching that?
Definitely. I think that's a story we got to pay attention to. That safrinha corn crop is getting planted right now. The dry weather has helped to get that crop in the ground in most areas, but the soil moisture conditions need monitored going forward in that region. And keep your eyes on that. Often we're looking left, and maybe we should be looking right. Right now we're looking at the Middle East, but maybe we need to be looking down in South America too and paying attention to what's happening down there.
Okay, and again, let me throw this one in. Corn exports, we're doing pretty good right now.
Demand stays solid here. Corn posting another solid week of exports. So that demand story with corn continues to be strength in the corn market, helping chew through that record production last year. And I want to remind guys as well, last year's marketing, last year, 25, it's over. It's behind us. As we look at 26, let's not get hung up and caught up on what happened last year. It's a new year. It's a new market, and it's going to be different, Tony.
Okay, speaking of difference, let's look at the difference between two currencies real quick. You mentioned Brazil. Let's go and look at the real right now and see a weakening here in the Brazilian real. And I mention that because what are we seeing with the U.S. dollar? A strengthening. We haven't quite hit that 100 mark, but it is within our sights. Is this something we at least need to keep in the back of our mind?
Always got to keep that U.S. dollar in the back of our mind. Exports and imports. A stronger U.S. dollar actually, you talk about beef, and I love cattle, kind of curbs to some extent the beef imports coming into the U.S. and helps support that beef market.
All right. That's where the dollar index trades right now. Speaking of trading, we're up and trading the cattle market. We've been open for 18 minutes. Where are we? We'll find out next. This is Market Day Report. Talking exports, pork exports have been pretty strong over the last couple of weeks. And is that helping the market? It's not hurting. Right now, though, we are watching April down 25 cents, 96.82, off 22 cents now on the May contract at 101.50. Couple of pennies, now nickel lower on June at 111.15. Pretty early on, though. We had 7 straight sessions of lower trade, 7 straight of higher trade, then 4 sessions of lower trade. We broke that trend yesterday. So does that mean we have 3 more sessions of higher trade here for the hogs? Again, if you're looking at it from a statistical type perspective, it might make sense. What makes sense here? Well, feeders are lower. We're at 363.80 on the March. That's down 12, 37 lower on the April at 360.37. And then we go over to live cattle. We're higher across the board. April up 95 at 239.30. One thing we have seen in the last week, last 5 trading sessions, high volatility. Brady Huck's with EmpowerAg and Dodge City, high volatility. Why have we been seeing so much of that here in the cattle market?
Yeah, definitely. Volatility is back in your cattle markets, and sell-off late last week prompted, I think, mostly by that lower cash trade into the weekend, and definitely some headline risk here. So whenever the funds are long, you got to be cautious for a liquidation event. Feeders broke below the 50-day, tested the 100-day moving average. We've reclaimed the 50-day moving average and are now testing the 20-day moving average on the chart. Fat cattle market broke that 100-day and tested the 200-day moving average and have reclaimed the 100 and the 50-day moving average as well. So a lot of technical stuff going on your cattle markets. Eyes will be on cash going forward here this week. Will we see at least steady cash? There's hopes of higher cash, and then continue to monitor the macro situation. So anytime there's pressure in your equity markets and then you got energy moving higher, how healthy is the consumer to be able to spend on beef, and are they spending more on fuel and less on food? Watching that here as we go into the weekend. So another thing I want to point out, Tony, wheat pasture cattle. You know, I live in wheat country out here in Kansas, and wheat pasture cattle coming off right now. We've got that growing point that's going to be coming out of the surface, and we got to get those cattle off, otherwise they damage yield. So big decisions in cattle country on whether we're going to graze out these wheat acres or whether we're going to take these animals to town.
Yeah, and some of the producers south of you have been making that decision. Well, I've already had to make that decision. So a great point on that. Again, in certain instances, we're using wheat pasture as pasture. And in other instances, as a cover crop. So just because you see wheat out there doesn't mean that thing goes to harvest. Brady, always great to see you. Thanks for popping in. Brady Huck is with EmpowerAg.